Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 26th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to live an inspired life. Hope everybody out there had a fantastic Thanksgiving holiday. For those of you that are still traveling, please be careful. The roads still are packed. You've got folks coming back from their long holiday today as well. And if you're listening to us on the radio, thanks so much for doing that. Maybe it's your mobile device that you're listening in. You're tuning in on tfnn.mobi. You can always catch an archive of this show on Channel 9 out there. So let's go take a look at one of our tools. This is the tool that I call your hidden treasure. Now, this is a little story of two brothers. W.G. Montgomery wrote about two brothers who landed in New York in 1845. Now, the older brother, he had learned the trade of making sauerkraut back in his native land of Germany. That's where they both came from. Now, hearing of the possible fortunes to be made in America, they both set out for, well, actually, the older brother set out for California, where he heard that land was cheap. Now, his goal was to grow cabbage, make sauerkraut, and really begin a business out there. And his venture, it actually turned out to be successful. And eventually, he bought additional land, he planted more cabbage, he made more money, and he was content with life. Now, his younger brother stayed behind in New York City. And what he was doing was he was working during the day, he was attending school in the evening, and the class that he was taking in the evening was a geology class. He learned about rocks and soil. And a few years passed by and one day he decided to set out and head on out to California and visit his older brother. Maybe it was around Thanksgiving time as well. And upon his arrival, the older brother, who was so proud, took him into his cabbage patch to show him what good crops that he grew out there. And the younger brother began picking up handfuls of soil and throwing them down and picking up handfuls of soil. And he said, "Brother, mighty fine soil you have here to grow your cabbage." Now, they both walked down to a nearby stream just simply so the younger brother could wash his hands. And he's washing his hands, and he picks up some rocks, some quartz out there, and he throws it down. And off in a little distance, he sees this little piece of dull painted yellow color. He goes over, he picks it up, and he says, "Brother, do you know what this is?" And the cabbage king shook his head, and he said, "No, I certainly don't." He said, "Brother, that's gold. That's gold. You've been growing your cabbage on a gold mine." Now, folks, one of the richest gold mines in California truly was found in a cabbage patch. Our mine, folks, can be just as rich in unseen resources out there as that cabbage patch was in richness to the unseen gold. Open yourself up to new ideas. It's Thanksgiving. We're heading into Christmas. Every day should be Thanksgiving. You should always be giving thanks out there. Progress and growth, folks, are impossible if you always do the same thing the way that you've done them in the past. What's your hidden treasure out there? Thank you so much for joining us here at TFN. For us, you guys are our treasure. As we go take a look at the markets out here, you've got the Dow futures off trading about 40 points or so. I believe it might be a positive open because of excuse me, I'm a little under the weather here. But we've got the S&P futures because of fair value. We've got the S&P futures down about 5 right now. That's what we've got up on the screen here. Trading out at 1,400 even. Had one heck of a move on Friday out there for a half-day session. Yeah, the Dow, as you probably know, finished up 172 points out there. The S&P was up 18. The composite was up 40. The small caps were up 8. Everything was green across the board. What we're seeing here this morning, we're seeing the markets pull back because they really got into extreme overbought condition. So they're just simply pulling back a bit, really working sideways most of the early morning hours out there. The NASDAQ futures down about 3 points, Russell down a couple points, King dollar up 2 ticks out there. We're certainly going to look at the currency market. Gold broke out on Friday. And, if you tuned in on Wednesday's show, we were showing the sideways consolidation range that gold had been traveling in. And what I said was that whichever way gold breaks out, it will be about a $35 breakout. That means gold has some more to go to the upside. You had silver right now is down 3 pennies trading out at 34 bucks. It's also broke out, not so much as gold. You've got light sweet crude here down 75 cents right now. As we take a look around the world out there, over in Asia last night, things off a bit. We're going to take a look at the Nikkei for sure. Speaking of the Nikkei, it was up 22 points last night. The Shanghai down 10. The Hang Seng off 52 points. No real big shakes out there. Right now over in Germany, the DAX is off 18 points, about 0.25%. The FTSE down about 0.5%, down 29 points out there. Our call-in number is always 877-927-6648. And you want to make sure that you always understand your Fibonacci expansion and contraction numbers. One of the things that we'll see here as we take a look at the ES-Mini, this is a 30-minute chart that we're looking at, and then we'll go to the daily charts out there, give you a better perspective from a daily standpoint where we stand. If we take a look at the 30-minute chart, you will see an expansion of swing points coming into that 1 o'clock session on Friday. 2.618 out there. Markets pulling back, doing what they're supposed to be doing. In fact, if we go right now from the swing point low to the swing point high out here, what you'll see is all the markets have done is about a 50% retracement. A 0.618 retracement would take the ES-Mini down into the 1384 range. That would certainly work off more of that overbought condition out there, but the markets are strong. Last year, a week ago today in essence, November 25th happened to be Thanksgiving. Today's November 26th out there. November 25th was the day after Thanksgiving, and then the markets had finished at their session lows, and then coming back on Monday, things really took off. Now, didn't get much of a Santa Claus rally last year, but Stevie, has brought out his Santa hat here, so it's possible that that Santa Claus rally started a little bit earlier. We're going to go take a look at that. Candle signals out there were certainly pointing towards a significant low out there. That's going to be doing battle here with Wednesday's full moon. We've got the full moon, lunar eclipse, and the moon at apogee, which is when it's furthest away from us. So we got a triple whammy. And if the markets just simply fight that off, folks, the Santa Claus rally arrived at many of the parades around the country. As a kid, I used to go down to the J.L. Hudson parade. That's when Santa arrived. And so we're going to go take a look at the possibilities of Santa Claus rally. We'll take things one day at a time. So let's go take a look at the actual daily futures market out here. Let's go start off with the Dow futures. That's in my upper left-hand screen out here. So as we take a look at the Dow futures, trading out at 12,921. Not much really of a pullback here. We can see this very powerful candle formation that did occur at the bottom. That was on the November 15th, November 16th time frame in the 2 days prior and after, meaning actually the day of November 14th as well as the day of November 19th. Very powerful reversal candle pattern out there. If we take a look at from the high to the low, the high in the Dow, we'd be taking a look at October 5th. That was the high of 13,599, pulled all the way down to the low that was put in on Friday, November the 16th out there, out of 12,520. What you can see here is that the Dow futures on Friday motored on through that 0.382 level, didn't even take a rest on Friday out there, came through with a wide-ranging bar, again, working its way on the intraday charts into overbought territory. That means it just simply has to work its way off. The Dow pointing to moving towards the 13,154 level. That would be sweet 618, more likely to get back up to the top of the swing point on November 7th out there, 13,251. That is the target for the Dow futures. Let's go take a look at the Russell 2000 futures, and we'll actually look at the indexes as well. If we take a look at the Russell 2000, also strong, very powerful candle formation at the bottom. If we go from the highs of the Russell, off of the September 14th level, 865.40, down to the lows of November 16th, 760.50. The same thing. The Russell 2000 motored on right through that dead cat bounce area, that 0.382 level. That says it wants higher prices, higher price here in the Russell. It'll want to try and tag the trend line, the rising trend line that it broke through, and it broke through with conviction on November the 7th out there. So it wants to go back, test at least the sweet 618 level. That'd be 825, but I think it wants to actually move just a bit higher. Probably will want to try to tag the high from November 2nd, 829.80. Now let's go take a look at the S&P futures as well as the NASDAQ. Let's go ahead and we'll round this out here. So we take a look at the S&P futures. S&P futures on Friday motoring right on through the trend line that goes all the way back to October 4th. Remember, we talked about when you break a long-term trend line, what will happen is price will try to go up and get back inside the trend. It will at least go and test it. Well, on Friday, or during Friday's action, during the shortened trading session, it simply got up over it, did it with a wide-ranging bar, got above the 0.382 retracement. That's off of the highs from the September 14th level down to the lows of November 16th. That says the S&P E-mini wants to get up to the sweet 618 level, 1419, more likely the price point of 1431 and perhaps even 1440, a 0.786 retracement. The S&P futures right now back inside the trend, really hovering, so just as it's trying to break on through, and it did break on through, now what it's going to do, as it has already done this morning, is test and make sure that it really wants to stay up at those levels. But I believe that it does, because the view, folks, is always better from the top. Let's go take a look at the NASDAQ futures out here. As we take a look at the NASDAQ futures, we're going to see the NASDAQ has been traveling. That has been the weak link out here, has certainly been traveling in a descending bearish price channel. That's the red vertical lines, not vertical, diagonal lines that you see here on my screen. Those black lines that you see, those are the retracement levels going from the swing point high in the NASDAQ. That's on the September 21st date, that level 2871, all the way down to the lows of November 16, 2492. NASDAQ futures did what they were supposed to do, because they have been the weak link. And what did the weak link do? It got up to that dead cat bounce area. It got up to the 0.382 level, which is at about 2637. What the NASDAQ futures did on Friday, they closed at 2634, got up to 2638.75, truly with a wide-ranging bar. What does that tell us, folks? That tells us, even though volume is light out there, that tells us that the NASDAQ futures also want to move to higher price. Higher price certainly is going to be the swing point cluster, which would be November 2nd on through November 7th. That would be the 2688 level. I suspect the NASDAQ futures, certainly they're going to run into some resistance. You can take a look at that descending bearish channel. That's really going to be the next area of resistance out there. It is here where we really have to be paying attention, because they've led the markets down. They're not necessarily leading the markets up out there, but the markets will not move higher without the NASDAQ also moving higher. That means we're going to have to be paying attention to stocks like Apple, like Google out there, as well as many others. 877-927-6648. When we come back, we'll go take a look at the currency market, because the euro also wants higher price. It came through the 618 level with a wide-ranging bar on Friday. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Before we were going to break, we were talking about the Euro-US dollar, currently trading on at 1.29627 out there. Now, we're taking a look at this was traveling in a bearish downtrend channel. We're going to go ahead and erase that. Clearly, it broke out of that price channel. You can see as it broke out, came back and tested it on November 21st, tried to get back inside. That was rejected. Now what we're taking a look at is just simply a bounce retracement here. In the euro, as we go take a look at that, we're just simply going to go from the most recent swing point high out there, which would be October 17th. In the euro, the price we're looking at is 1.31383. Now we're going to go from that high down to the next major intersection, low out there. That low coming in here after two doji candles on November 13th. That was just simply telling us that the market was tired. The euro certainly was tired. The following day, it had a nice bullish engulfing. So on November 13th, the low out there, 1.26593. If you go from high to low out there, what you will see is the 618 level was attacked on Friday. You did it with a wide-ranging bar out there. In fact, if you look at, with the exception of really one trading session, which was November 16th, which was truly a neutral trading session out here. I'll just go ahead and blow this up on the screen for you. So you can see coming off the bottom, you've seen nothing but bullish moves on each of the candles. You might say, hey, Steve, look at that red candle out here from November 16th, and that really was a bearish candle. Absolutely not. Now, let me tell you why I say that. Go ahead and take a look at where price closed right here. Just think of a tug of war. You know, in the sand, you got the bulls on one side, you've got the bears on the other side, and if you take a look at price, where it actually finished here during the 16th, you can see it pretty much finished equal to a little bit north. In fact, if anything, the bulls had a little bit of the edge on the November 16th level. So don't just take a look at the color of the candle. The entire candle has meaning out there. Price certainly is the ultimate arbiter. And if we take a look at each of the succeeding days out here, you can see the bulls absolutely in control. Right now, you've got a little bit of a spinning top out there. You would expect that after getting all the way up into that sweet 618 level. It just shows that the market is recharging. You would think maybe after the holiday session out here, after a nice long weekend, it would have been enough to recharge its battery. Even like me, you would have thought it would have been enough time to recharge my batteries. But no, that wasn't the case out there. What the euro also doing, making a 100% move of simply what we'll call a junior swing point. That's getting back to the swing point of October 31st. So it has done that, just simply moving sideways, really doing what it's supposed to do, but coming through that 618 level with a wide-ranging bar. Says the euro wants to at least get up to the next level, still trading above the 618 level. That would be 130, looks like about 130.53, somewhere right around there. Maybe even go ahead and make a 100% move, get all the way back up to the highs from October 17th out there, 1.31383 out there. That, folks, will absolutely put some energy in the marketplace. If we go take a look at the double, we talk about having a triple whammy here on Wednesday with the full moon, lunar eclipse, and the moon at apogee all on the same day. A nice double whammy out here in the markets that should help the king dollar pull back is the Japanese yen. If we take a look at the Japanese yen, it completed a 1-to-1 A to B equals CD. It does still want higher price. It got up to the sweet 786 level. We knew that was where it was headed to because the wide-ranging bar coming into it as it approached the 0.618 level on November the 15th. We know that the bears really never showed up for work as you take a look at those candles. Just simply a pause on the 16th and on the 19th out there. Then it went ahead and moved higher Friday, really on the 21st, I should say, really moved higher out there. That was not Friday. That was on Wednesday, moved up into that 0.786 level. Now, just simply backing up. As this does a retracement, what that does, folks, is that goes ahead and strengthens the yen, weakens the U.S. dollar. Just simply a dead cat bounce would take the Japanese yen down to 81.30. That's a easy dead cat bounce there. I suspect we will see the yen perhaps come all the way back and test the most recent B point, the November 5th high, right around $80.55. If we actually go from the swing point low where this A to B equals CD started September 13th to the high that was put in on November 22nd, the 0.382 level there, as you'll see, comes right at that B point. So that's why I say that's the real dead cat bounce here. That's nothing more than a 0.382 retracement. That is where you would want to jump all over the Japanese yen out there. If we go take a look at the markets around the world here real quickly, as soon as I can find that chart, there we go. Take a look at the markets around the world. Let's go over to the Nikkei, which has been strong. Folks, you want to make sure you understand your expansion and contraction numbers when it comes to swing point using the Fibonacci summation series. The Japanese yen last night, as it opened, made a 1.272 expansion off of the September 19th or 18th swing point, September 19th, and a 0.618 retracement off of March 27th. Doing what it should be doing, the Nikkei set to now pull back. 877-927-6640. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 81 points right now. S&P down 8. The composite off 8 as well. Small caps off 2. Microsoft down 27 ticks. Intel off 5. Google off $3. Cisco up 16 or down 16 pennies right now. Apple leading the charge. The upside up $4.30. They're the leaders in the clubhouse. That's up about 0.7%. You've got Decker's Outdoor just behind them up $2. That's up 5% out there. You've got Zongpin. HOGS is the ticker symbol, up 15% this morning. That's up $1.69. Abercrombie and Fitch, ANF, having a nice morning, up about 2% here. Facebook up 3.5%, up 90 cents. eBay up 75 cents out there. Sarepta Therapeutics, SRPT up 65 cents. Leading things to the downside, you've got illuminating things to the downside, I should say, down $2.70. Illumina Inc., ILMN, that's off about 5% here this morning. Generac Holdings, we're going to go take a look at that because that could be setting up a island reversal formation out there. GNRC is the ticker symbol, so we'll take a look at that. That's off $1.58 right now. Salesforce Innovation, Salesforce.com. SCRM is the ticker symbol, off about $2 right now, down 1 2/10%. Netflix moving down 2%, off $1.82. Visa off $1.43. Goldman Sachs down $1.35. Our call-in number 877-927-6648. Let's go start off with Apple. As I mentioned earlier, the NASDAQ futures making a 0.382 retracement on Friday. So getting to that first level where it lets people off of the elevator out there. That's what it's certainly doing here this morning. So everything going along as planned. Now, Apple, because of the weighting structure, about a little over 17% inside the Qs out there, is something you're going to want to pay attention to. Apple has not made it back to the 0.382 retracement, to the dead cat bounce level. That's coming off of the highs in Apple, which, as you know, came in on September the 21st, out there at 705.07, made that move all the way down and formed one of Stevie's hammer candles on November the 16th out there, when it got down to a low of 505.75. The 0.382 level, 581 and change, trading out right now at 574.50. So that's what we're going to want to do, is keep an eye on Apple, because Apple's going to have to lead the charge up to the upside. You can see volume here. I'll just blow up my screen chart here. You know, Santa's going to need some help. He's going to need more reindeer out there. When I say reindeer, we're talking about volume. Don't take a look at today's volume, but you can see on the move up here on Apple, not a whole lot of conviction behind that move. The same thing that we've got going on inside the entire market. Can the market continue to move up on lighter volume? Absolutely it can. But that, folks, would then be setting up a big kibosh to the downside, most likely setting up the B to a C of a very large A to B equals CD up. That's only if we don't see volume inside the marketplace out here. Let's go take a look at some of these other stocks and see how they are popping and dropping. Generac, GNRC, is one I want to first look at. I believe that it is still up here on my screen, because I've been watching that just to see if, in fact, looks like it's not up there. So let's go ahead and we'll add it right now. GNRC, again, is the ticker symbol. They certainly had a great, so it has not formed an island reversal, at least not yet. They've had a great, because of Storm Sandy, Hurricane Sandy, Generac here, all it's actually done is come back to the area where it broke out, which was on October 31st out there. That was prior, I think that was just prior to Hurricane Sandy hitting the shores of the Northeast out there, or maybe it was the following trading session. October 31st, 5.1 million shares to the upside. The low there is 32.50. What it has done this morning, gap down, got down to a low of 32.88, trading off of that low here this morning. But going to want to be watching this, because this could be setting up one heck of an island reversal formation. What would that take? Well, first, I don't know. Let's assume that today's low is the low of the trading session. All that it would really need here would be a gap down sometime, let's call it tomorrow, below 32.50. And it never hits the 32.50 as an intraday high out there. If that's the case, this would be set up one heck of a island reversal formation out there. That would be very bearish. This is an equity here that has had a nice run from the IPO date back in February 2010, down at $9.57. That was the low out there that day. It actually got to a lower low in the $7 and change range back in the June timeframe out there. So the only volume that, now I'm not saying that's what it's going to form, but if you are in this equity as an example, you're going to want to make sure that you do not see this thing form this huge island out there, because that would be a very bearish signal out there. Let's go take a look at things that are popping and dropping. Let's go take a look at Google. Google leading the charge here to the downside, off $8 and change. Google had, I believe, a pretty decent day on Friday. Of course, you'd hard-pressed to find too many stocks that did not have a good day. Well, I guess Google didn't have a fantastic day on Friday, did they? I should have not spoken so quickly. So we take a look, let me just refresh my chart here. So we take a look at Google on Friday, really not doing too much. Closed out at 667.97. It had closed out the prior session at the 665, so only up a couple of bucks there. Moving down this morning, volume-wise so far, 181,000 shares to the downside. Perhaps Google going to come back and test this little higher volume low out here from November the 16th. That probably would be a pretty decent signal to be watching as well. You've got 3.4 million shares. The high there is 653.02, 660.33. That could be an easy test today. If Google can test the 653 area. Now, the spread on that candle, the low is 636 to 653.02. You get a test of 636 or less than 636 on less than 3.4 million shares, and close back above it, that would be setting up a rejection of a swing point down there, and then Google just really traveling in a little bit of a sideways range out there. Let's go take a look at the metals market here. Let's go take a look at gold. I did mention in the opening, gold broke out on Friday. Again, showing you this little sideways band here, a little consolidation area at gold, really consolidating since the November 7th time frame out there. That low came in at 1703. The actual, 1703 even. If we take a look at the high during that consolidation period, it was on November the 19th. That level was out at 1739. That really set up the $40 area that gold should move once it broke through that horizontal trading range. Now, I didn't know to which side. I suspected that it was going to move to the upside, where what gold was really going to do is another test of this little triple test out here of the highs going back into the November time frame, then February time frame, and then most recently here, October of 2012. So if we add the $40 or so to the 1739, that says that gold should get up to the 1780 level. 1780 level, that's where I suspect that is the swing point low, is 1774 from October the 5th out there. And I suspect that is where gold is headed to. And probably will go ahead and actually, I would think, as long as it's there, we'll go test that 1800 level. Let's go take a look at silver out here, see what silver is doing, trading out right now at $34. Silver also breaking out, but silver never really had a horizontal trading range. It was really more of a, making lower lows, higher lows, thank you, making higher lows out there. And silver wants to trade back to the top of its range. Now, the top of its range, really, I would say the most recent swing point high out there, which is October 1st in the 35.44 level. If we take light sweet crude really not doing a whole lot. Light sweet crude wants lower price. Light sweet crude right now trading above what looks like the 20-day exponential moving average out here. What you did see with light sweet crude, it got into a oversold condition back in the late October time frame. Pretty much just been moving sideways here. So the high of the consolidation box would really be the high of November 6th out there, I would say. That level about $89.22. So you've got light sweet crude consolidating, forming another box range out here. Light sweet crude wants to get down really to the $77 area here. It's not going to do it right away, but it does want a lower price. At least that's what it looks like to me on the charts right now. Let's go back and over across the pond here. Before we went into one of the breaks, we were taking a look at the Nikkei. So I'll go ahead and point this out to you again. You want to make sure that when you're trading that you understand what swing point expansions and contractions are of major swing point areas. Here, if you take a look at the Nikkei, you can use the high of September 19th. If you go from that high, which on the Nikkei was $92.88 and a little bit of change, all the way down to the low that was put in on October 15th, that low was $84.88. If you measure that price difference here, and you multiply that price difference times 1.272 added to the low of October the 15th out at the 84.88 level, that'll take you up into the high that was where it gapped up last night, and then it continued to sell off. Still closed up 22 points, but it did what it was supposed to do. Made that 1.272 expansion, made 8.618 off of a major swing point that went all the way back to March 27, 2012. I do expect we will see the Nikkei go ahead and pull back. Now, the Nikkei here has been making, on any pullbacks here, has been holding about the 0.786 or just a little bit beyond that. You can see 84%. I suspect this time, if the Nikkei does in fact pull back because it is strong and because of the yen out there, I suspect you want to time those. But it looks to me like the Nikkei this time around probably will only pull back to the 618 level. That would be in about the 8900 and change range out there in the Nikkei. Let's go take a look at the DAX. See what the DAX is doing. It is trading off 15 points right now, so the DAX not really giving up a whole lot here in the marketplace. You can see the DAX, the importance of the chart here that you're looking at is the mere fact that price is back inside the rising price channel. So the DAX broke through that, back inside it, broke through it here I would say with some conviction on November the 13th, only lasted inside, and on Friday moved back inside that channel with conviction. November the 23rd, the DAX wants to make a run again for its highs. That would take it to the November 7th high out there, 74.35. So all the markets really somewhat synergistic out here. Now the Nikkei pulling back, that has more to do with the Japanese yen. As the Japanese yen gets stronger, King dollar would get weaker, and that will put some energy in the markets for the next run up inside, at least through Wednesday, but perhaps beyond Wednesday as well out there. We'll just simply have to take things one day at a time. If we do go take a look at the actual indexes out here, we've got the S&P weekly chart. So we did close out the week last week. As we take a look at this, on the prior week session, the prior Friday, November the 16th, you had the S&P 500 come down and test that long-term rising price channel. Now, when I say long-term, folks, we're talking about going back to the generational lows, the March of 09 level out there. That is really your first set of touch points here, because that's the close from March the 6th and the open of the week of March the 13th out there. So very important price channel. You had the S&P 500 get down, touch that level. Last week, what you had was a bullish engulfing candle. Why is that important? Well, do you believe that patterns repeat themselves? Well, if you do, then pay attention to this. If we take a look at the bullish engulfing candle as price moved down on June the 4th, it was really the week of June 15th out there where you saw the markets move higher. What you have here is a bullish engulfing candle. So you've got one there. How about when the S&P 500 came down and tested that rising price channel in the November 25th level, then December 2nd? What did you get that week of December 2nd? You got a bullish engulfing candle out here. How about when the S&P actually broke through it on September the 30th? Maybe you remember back in the August of 2011 timeframe, the markets were just moving down. We got some reversal signals in the markets. Now, you got a leading indicator on the weekly basis. You got a bullish engulfing candle on October the 7th. Our lows, the most recent lows, October the 4th. We're using that as a benchmark out there. We do have volume down there, but right now, look at all of the bullish engulfing candles as you've come off of those lows. Of course, March 6th of 09, really the week of March the 13th out there, another bullish engulfing candle. You want to make sure you understand your candlestick patterns out there, folks, because they are leading indicators. What needs to happen this week? You need to see a close on the S&P in order to maintain that bullish engulfing candle, at least from the work that I do out here. You need to see a close above 1379.86 out there. Let me make sure that to give you the right price here. Cursor. How about 1379? 1379.86. Maybe that's what I did say. That is what we need to see as a close above this week to confirm that bullish engulfing candle out there. That's why the lows that were put in a couple weeks ago, 2 weeks ago, not last Friday, but the Friday before, very significant lows out there. And if we take a look at those index patterns, in fact, we just simply went back and take a look at the 1929 forward session. But most importantly, if you take a look at this candle pattern right out here as we made the lows on November 16th, same set of candle signature out there that you made coming into the lows of June 4th. 877-927-6648. Dow is off 70 points right now. S&P is off 6. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. We've got the Dow trading off 72 points right now. The NDX, though, just slightly green, up about 3 pennies. The transports out there up $9 and change out here. We're taking a look at the New York Stock Exchange. New York Stock Exchange off 42 points. New York Stock Exchange, if we take a look at the patterns out here, making it almost all the way up to the 618 retracement level. Now, that 618 retracement level we're talking about is coming off of the highs in the New York Stock Exchange from September 14th. The high out there was 85.15. The low put in on November 16th out there at 78.41. 618 level pretty close to really being hit. Closed at the session highs out at the 82.25 level. You've got it 82.58, another 25 points in order for it to get up to the 618 level. I suspect the New York Stock Exchange, when it all said and done, it wants to get up to the swing point of November 6th. All the markets really set up the same way. That would take you up into the 83.29 level, and it's really going to be a thing now of volume we're certainly in a low volume marketplace. We'll see if volume does pick up to the upside out here. If we go take a look at the transportation index, let's go see what the transports are doing. The transports right now at the high of their trading session out here, that says that they are trying to finish off at least 8.618 retracement. Oh, that's interesting. I got this thing popping up on my screen again. Oh, man, how do I get rid of this? Jeez Louise. I hate these things. I've got something popped up on my screen here, folks. Now, I know I don't want the discount here. I wonder if sorry about this. It kind of gets in the way. Now, how do I get rid of it? Anyways, the transports here trade now right now at 5,064. You see, this is the way of the universe actually testing me. And we'll see if that thing actually does pop up. So you got the transports up at the high of their trading session here. Transports want to get up to the 0.786 level. That'd be 51.33. So the transports have higher to go. Transports here actually the leading index out here, positive to the upside. Something to think about. If we go take a look at the King dollar out here. King really flat here this morning, up about 3 pennies, trading out at 80.27 right now. If we take a look at the retracement that we should expect here on the King, let's get rid of the A to B equals CD. Let's just simply go from the swing point low on the U.S. dollar index. That's going to be your September 14th date all the way up to the high. Put in on November 16th. You can see kind of slicing through the 0.382 level, just as if it was Kerrygold butter out there. The U.S. dollar index wants to make its way down to 79.79 out there. That would be the 618 retracement level. Perhaps come all the way back and test the swing point from October 17th. Get out into the 79.30 range, 79.28 out there. That will put some energy in the marketplace. Let's go take a look at a couple of these other stocks here that are popping and dropping. You got Rand Gold Resources. So GOLD is trading off this morning. They are down about 3%. So let's go see what is behind this move out here. See if there's anything. Nothing from a earnings standpoint. In fact, their earnings was a while ago on Rand Gold. On Friday, moving up with 226,000 shares. Looks like there is a gap out here that was left. Most recent gap, November 16th. The high of that is 102.35, 421,000 shares. The low of the gap, which will be your November 19th day, 103.68. Getting down so far to 103.66, trading at 104.07, 109,000 shares going against 698. It's got the volume to come all the way back and test the November 16th area. Folks, thanks so much for being here. Stay tuned. The Money Masters show is up next. If you're off to start your day, have a incredible, marvelous, magnificent Monday. I look forward to seeing you tomorrow at 9. Take care.